Hi, everyone, and welcome to the midweek market update from Smack the Markets for the 29th of August 2019. So, this week, although it's been quite a light news schedule on the economic calendar each day this week, but it hasn't caused any lack of news because we're getting a huge amount of news out, especially on the trade negotiations with the US and China. That is looking quite positive, especially this morning. We had some nice comments out of China about the September meeting, and they're hoping for a positive outcome of that and a nice environment and nice comments like that. Um, on the other side of the Atlantic, we have Brexit, and that's really slipped into a higher gear. On Tuesday, we had the opposition parties uniting and meeting in an attempt to prevent a no deal Brexit taking place. Then yesterday we had the UK government looking to prorogue Parliament for 5 weeks, and they met the Queen and they were successful in that. So it looks like now that the Parliament is going to be suspended for 5 weeks, but it has caused quite a reaction in the UK, and everything a little bit uncertain there. I'm not sure what direction it's going to take at the moment. Um, if we look at start with some forex markets, we have this week we have the main ones that are weak is the Kiwis and the Aussies, so they're quite interesting chart structures in some of them. But this is one of the nicer ones here, the Euro versus the Kiwi. So if we open up the weekly chart to start with, and we just look at where it is at the moment, so it's just exactly 175.03 at the moment. So it's right on that 175 level. If we wind out of that and we just look at the significance of that, going back even into the early noughties and stuff, you can see quite a bit of stuff going on. But even in more recent years, you can see that it was the high of 2017, for example. 2018, it got quite a rejection of it from the bottom. Eventually, it broke through and then it pulled right back into it again and gave another nice trading opportunity, and that was 2018. So at this point, it did break through it yesterday, pulling right back into it at the moment. We can see here on the 4-hour chart that this zone here, the moving average zone here, is very respectful of it, and something maybe along the lines on that area, the moving average zone clustering with that area of 175, that could look very good on the 4-hour chart, or even maybe on the 2-hour chart here. That zone isn't far away from where price fires off each time either. So that's our favorite forex market. If we look at the indices and look at them on a higher time frame to begin with, so we're having quite a strong week so far this week, but at the same time, it's still stuck in this range, and you can see the range there on the weekly chart and the daily chart. And the last 3 weeks, it hasn't been able to break the highs there of that weekly candle, and also that area there on the daily chart. Coming down a little bit lower, we have the 4-hour chart in a very nice uptrend at the moment. We see that movement in the most recent candle. That's on the back of that Chinese news that just came out around 8 o'clock this morning. And, moving averages still haven't gotten into formation. Coming down a little bit lower, we can see, in spite of the higher time frames being quite messy, this is still a very technical market, and it is very respectful for all the levels that we have marked in here. So you can see that generally speaking, it does get from one point to the next once it does break it. Although it may not look pretty on the higher time frames, it does look good on these lower time frames. So at this point, after that news, it moved about 200 points. It was just hovering around the 26,000, the huge level of 26,000, and it went up to that around about that 26,200 level. And that brings it, if it continues in here, it brings us into this window here between 26,200 and 26,350 at the top of that range there. It is overextended, so a pullback is reasonable, and the obvious place for it to pull back to is around about that 26,000 area. That would take out the overextension on that. Now, if it does manage to continue its upward move, and if we open up the 60-minute chart and we see where it is likely to go, so it'll break into this range next if it does continue. Now, that's quite a messy range to be in, and it tends to spend quite a bit of time in there when it does get there. But if we look at the top of that range, it's very precise for a start, and it also opens up a nice window to the top side. Now, there is another level in there of about 26,500 that needs to be kept an eye on. But there are two targets after that, 26,500 and 26,700. And coming down a little bit lower, and with that bared in mind, you can see that the complexion of all of these charts here on the higher time frames would change if it did manage to break that level on the top side here. So, the daily chart would have broken out of its range there. The weekly chart would have broken out of 3 weeks in a row of that price contained underneath that range. And these 4-hour charts and mid time frames would just basically continue their upward move and their upward trend. And also at that point, you'd expect moving averages to be in line at that stage. And the interesting thing is that The Nasdaq and the S&P have very similar levels, and if they all broke them together, we could expect quite a bid on this and quite an upward move. So if we come to a commodity, our favorite commodity this week is silver, and the commodities in general, the metals in general, I mean, are having quite a good week and weeks even. But at this point, opening up the weekly to begin with, we can see that it sliced right through this week, right through that $18 mark, and that was quite a big level on this weekly chart. At this stage now, it's just on the next level, around 1855 or 1860. That's the next level we can see here on the weekly chart. But coming down a little bit lower, very overextended on the daily, a little bit overextended on the 4-hour chart. And if we come down even a little bit further, we can see, if we just move them up a little bit, we can see that pullbacks onto these moving average zones here on the 30, 60, and 15 is something we're very interested in. But also, if we come up to the 8-hour chart, and we can see here that if we do get a bigger retracement, pulling back into that $18 mark, clustering with that buy zone, that would maybe give us a very nice opportunity to avail of some of this strength in the metals. So that's the kind of ones we're looking at the moment, and that's the way things are sitting at the moment. Very much, strength in the metals, weakness in the Aussie and Kiwis, that kind of a picture. And that's it for the midweek. So we'll be back next Monday, and we'll see how things are looking at that stage. So we'll speak to you then.